Welcome to the Trading Lounge and the day ahead report. Here we look at the S&P 500 and 20-minute chart. We were looking at last time we spoke. We looked at these three moves down through here, which could have been an ABC pattern or a developing five-wave pattern. And as you can see here, we've got five waves to the downside now, which is an impulse wave. This will be followed by an A and a B and a C correction for a B wave. That may take to sort of midweek, and then we'll see another five waves down through here, which will be about the same length as this one here. So it does make our robo trading a little bit tricky. So we need to trade shorter time frames and take profits, more profits at earlier stages until we get through this. So yep, look, we're looking for an A and a B and a C wave to the downside. Same with the Dow Jones as well. This is just the daily chart here. So this move we've got down through here will be five waves as well. So we'll see some sort of retest to the upside there, and then another five waves down, pretty much bringing it down back into the 13,000 there, retesting it as support. So here we can see on the 2-hour chart just the little five-wave price action through here. So we'll see a retest of supply at 13.2 and possibly higher to these highs just in here somewhere up there. It's a little bit tricky. We've got to work it out as we go. But the main point is understanding we get five here. After correction, we get another five through here. The Australian market will be the same, the FTSE and so forth. When this rises up through here, in some markets, like the DAX, for instance, we'll be seeing this on the DAX here. We're sort of expecting another little wave higher through here. So the B wave rally in the S&P 500 US indices, fine, but we may see this one just take out a new sort of high here. When we come into our local markets here, we're still the market's still banging its head against the 4600 here as resistance. And, you know, it's doing its correction as well through here. I also see this as a fourth wave through here, and fourth waves get complicated, you know, the triangles and double zigzags and all those sort of things. So it's a little bit hard to sort of work out what's going to happen. We know support is here at SG2 and also at the midpoint here, 4500. So we should expect some sort of some sort of rally into this space here, but yet then a down again through here. It's going to be messy, so you know, be very careful about that space there. But once we've got a correction here, this correction will be the foundation for the next push higher, which will be the first high above the level. So which is normally a fifth wave, and we'll see five waves in that area there. But we can kind of line that up with the US markets. The HSBC, the manufacturing figures coming out of China were positive, and obviously that's seen the market push up quite strongly from there. Let's just have a look at China while we're here. Just bear with me here. Rightio. I guess the other good thing about this too is that if I just bring this in perspective here, we were looking for a low to come in for this market here, and it's come in nicely. But the thing that I like about it the most is the volume that you're seeing here coming into the market. So not only with the Elliott wave count that we had looking for a low here, then we got the China stimulus coming in, and then we've also seen the manufacturing figures here coming. So we're really seeing, you know, we're seeing strong volume to the upside during the correction here. We knew this was a correction through here, and what happens how do we know it's a correction? Because it's on lower volume. So when we see lower volume through here, diminishing volume through here, then we know that there's no sellers in the market and the trend is to the upside. Even so all good. Right, so it's the Australian market. Let's have a look at the commodities, and the commodities are quite sort of stable and steady and positive, because the US dollar is down, and of course the strong manufacturing figures to the upside as well. Okay, the copper market here, you can see that the 365, the lower level of Group 2, is playing out as support. However, we are in a correction here. We knew that this is the strong part of the trend, and then we can see that it's getting sort of weaker through here, even though it's edging higher. So we are in a correction here. How far sideways will it go is a bit of a guessing game. We expect the US dollar to continue further to the downside, so we should see this retest 368, 370 before seeing another little leg to the downside here. But the main point is that it's steady and stable up this end here. There's just going to be swings there, so there's more corrective pattern here before we see further upside here. The oil market, it's going to be kind of moving with stock, I would imagine at this point. This is a 4-hour chart, but we're looking for this being 5 waves down through here to make wave 1, then an A wave, a B wave, and a C wave, coming back up. Probably, well, maybe the 87.72 was the number that struck me the most, but essentially a retest of 88. The wave C here is normally some sort of relationship in terms of equality to wave A, so we're looking for 5 waves up here, maybe 1, 2, 3, 4, and 5 up through to here, and then rolling over down through here. And if you can line up the ABC correction in the S&P 500, where we've had 5 waves down, and we're looking for a B wave rally, so the oil should rally with the indices, and then they should pretty much roll over together. So I think that could be an interesting short trade there. The gold market, also a short trade emerging in the gold market here as well, and be the same for silver as well. Essentially what we're looking for here is we've got our little 5 wave structure to the downside here, and we're looking for an A wave, which we got, the B wave in 3 wave, which we got. It may not be finished, it may come down here a little bit further, not sure, but then we're looking for a wave C to the upside. The wave C to the upside will be in 5 waves, and once again that may also have equality towards the wave A here. So essentially a little jab up past 1700, failing to find support, perhaps a little bit like this here, and then moving further to the downside. So if this is wave 1 here, then wave 2 here. So wave 3 is going to be longer than wave 1 here, so that can be a nice trade back down to the 1650 area through here, and wave 3 will be the strongest. It's like looking in this here, wave 1 here, wave 2, then wave 3 here. It's nice and strong. Well, this is what's going to happen over here as well. So finding a short position, well, a couple of things could happen from here in that it could retrace back up to, say, 1705, 1708, perhaps into this area here, then roll over from there. But we need to be mindful that, it could just sort of fail again at the 1700 here and roll over to the downside. So until it moves up here, we don't know that. When it moves up here, we'll start looking at the structure to the upside. On the downside here, if the 1690 becomes a retested resistance, then we really need to take a short position from that area there. So just be mindful of that. Alrighty, let's have a look at FX. Okay, for the US dollar here, the US dollar that we follow here is a futures contract, but it's a CFD over a futures contract, and they're just rolling into the new month now based on volume coming into the new month, and so this is why it's labelled a little bit differently. But basically, what we're looking for here now is we're looking at this being wave 1 down here, wave 2 here, wave 3 here, wave 4 across here, and wave 5 down through here. So we should see spikes like this, even though that they occur, it's kind of just sort of taken with a pinch of salt, really, because it's sort of like wave 3 to here, wave 4 to here, and so wave 5 to here, to me, in my own little mind, as small as that is already taken the low of this out in a sense. So so look, we could see the low of this 5th wave down through here. Because wave 1 wasn't very big, that means that wave 5 is going to have some sort of relationship to it, because the extension was in wave 3 here, even without that spike. So another little push down through to here, somewhere into group 1 here before we see another retest back up. But we've got our 5 waves down, so we'll be looking for some sort of counter trend and then a move down as well. We really need to line that up with the S&P 500 as well on the flip side. And also when we're looking at the euro too, pretty much the same on the other side as well. We were kind of thinking that the US dollar would have a rally above the 80 there, and if it did rally above the 80, then we could have shorted the euro, but that's not the case. This has failed its retest at 80, so it keeps the euro on the long side. So above here, we need to look at this also in a 5th wave as well. We were looking at a 3rd and a 4th and a 5th wave into here, or to here, I think it was. But this is obviously because the US dollar's dropped to the downside, we have to consider this being the 5th wave through here now, and we need to finish counting that to the upside there. So that's where we are with that. This is obviously the 3rd wave coming out through here, which may be in already here, but I think this is a little 4th here, so we'll see one more little 5th wave up here, then a 4th wave, then a 5th wave up through here. So we should see the US dollar do the same on the flip side. So just look at the US dollar a bit, and also the Swissy as well. That bring that into the wave count as well. So they'll should be able to see those all working together quite nicely. The Australian dollar, obviously the strong manufacturing figures coming out of China is helping this market continue to the upside, and the wave structure that we're looking at here also sees it to the upside as well. And one of the points for that is that this little corrective pattern here in 3 waves that's retesting the demand here and the price level here first retest, which is good, but this trend up through here will eventually come back and retest the 5 in a larger correction. But because we've got those little 3 waves there, that's an ABC correction. That's one of the simplest things that one of the most valuable things that you can have in Elliott, is just knowing that that's a 3-wave correction, because this has moved up nice and high through here. So that means that eventually that high there will be taken out. So this little pattern here is very similar to, say, this little pattern in here, just different sizes. This 3-wave pattern here, that's why we knew that this would go higher through here as well. So once again, we've got that 3-wave pattern in here, so we can expect that to go higher there. This is on a 2-hour chart, so if you're going to be trading this, you'd need to be working the group 2 area in here, the 65.72 as support, and start sort of cranking it in at that point and adding on the 80, and of course covering into the to the 160 there. But depending on how short what your trading plan, how you trade. So but whichever way you trade, use the price. It's all good. Alrighty, well that pretty much sums it up. So just to sum it up a little bit more, the robo trades that we take this week in the US and the UK and Australia, they will be, we have to look for short-term gains, so taking profits, larger profits at closer ranges would be the tactic, while the US markets are going through its ABC correction. So we're not trading into a trend, we're trading through a correction. So there is a difference. So don't expect the same. We've had some good runs to the upside, so it can get a bit choppy. So less is more, so to speak, and taking larger profits earlier would be a way to go through. Even if we're wrong, we need to be happy with our lot, and we'll move on from that point. Alrighty, well, good morning, good luck, and enjoy the day ahead.